Hey everyone, just bringing you a daily update for SOL BTC market cap. Starting with liquidity, it looks like 30-day is still bigger to the upside, so incentive would be overall to push up to take some of this. Certainly the market is not over until they've wiped out all those shorts and gone back down. If we look at 7-day, 7-day liquidity is starting to even out. So it's showing 174 sort of through to 185 to the upside, and anywhere sort of down to about 154. The thing with this type of liquidity is that as the price goes down, there are more people open positions, so therefore, going lower is still a possibility, but there is incentive here for them to go both ways, and we've got news. I think we've got unemployment claims coming on the 8th, so it looks like they're doing everything possible to get people to open positions in both directions. So I think you will see some violence and volatility come through soon. If we look at 1-day, 1-day is more biased to the downside. So that's the area that they're obviously trying to build. They're trying to get people to take out long positions because they've already got pretty decent liquidity to the upside. The numbers that are sort of showing on the 1-day kind of line up with what I've been thinking around that 1117 or 117K rejection area for Bitcoin, and into those sort of 170s again for SOL. So keep an eye on that, see how it builds. Also, just a new feature which has just come out on Coinglass is this one here, which gives you the max pain. So basically, at which price point do the most people get liquidated? That's quite a cool feature. I don't think I would use that to place orders because like putting an order at 162 as an example, when we've already got structural moves and support sitting at 153, is probably not the best idea. But as you go through and you choose the different time frames, you'll see that the numbers change. So if we go to monthly, 172 and 157 become the SOL numbers. So I guess things like this can be used in Confluence for trading, but you wouldn't just want to place orders on these numbers. Maybe for spot buys. As soon as the order gets activated, you definitely want to be tracking it, taking profits at resistance. But other little interesting things like the monthly max pain there at 157 to wipe out shorts, but then you look at the weekly. The weekly is 154. So which one do you go for? Are they going to hit the stuff on the weekly, or are they going to go the stuff on the monthly, which is actually a bit higher up? So, but it is still the more of this kind of stuff you've got your hands on, better choices you can make. And when you start to see similar numbers popping up, then definitely they're the ones that you want to be paying attention to. So it's quite interesting. The weekly at 154 is an example when the actual weekly support inside the monthly support is actually about 153. So it's almost like people choose to put their liquidation levels at the place that the price is actually already intending to go on the chart. Just got to wonder, is that a mistake? But yeah, that's our liquidity as it currently stands. The new feature. Everything's kind of lining up with what the charts are saying, so let's have a look at those. So SOL BTC Strength, it's actually not so bad. Like it's sitting on this range trend, and it's probably going to hard close inside that range trend today. And then if it bounces off that, then it's going to come up to one of these higher levels up here, test the resistance on the backside of the range. So from a 1-day perspective, it may come back to 0.0014 and then bounce up here to what's nearly 0.0015. So that might be that little strength push that SOL needs. If we look at the 2-day though, the 2-day is actually going to close under a break. So it's still got support, but if it does push up, it's probably from this level, if it does push up, it's really going to at most sort of get to this 0016 level and then probably have to just pull the whole way back down or reject the whole way back down. So that's just, again, lining up with everything we've been looking at last week or so, is that these levels like 0.0016, they're quite key. And we're starting in a position where if we move up too quickly from here, we just have to come back down, which sort of leads to the thought that there is going to be a final liquidity sweep when people least expect it. And if we look at flight to safety assets, they're dipping back down towards the trend, so they can keep moving back down for a bit longer. But we're still sort of in this area until we either break up or down from it. But so 67.6% would sort of be where we're going to hit that roughly. If we go to the upside, 68.3. So as long as we don't really go out through the top of this, then I'll still have a pretty good chance to have a run. Going down is what we want. So this daily candle, that there is a 3-day trend, so this daily candle can't break it, but it can certainly position itself so that when we get our next 3-day close, that we could be above or below one of those. Over into the totals, the daily total is looking like it's going to have a trend break if it stays at this sort of level. If it goes down much further, then it could obviously not break out. So we're looking at we're looking at 340.08. We want to stay above that. However, this big work on the top of this candle, which this is going to shift to there, means all we're going to do is we're going to break a trend and we're going to open under another one. So it's if this does break the trend today, all it's really going to be able to do is have a bit of a pump and then reject a second time. So it's not absolutely out of the woods yet, that's for sure. If in the next 2 hours this actually does get up above this level here, so if we can get above 345.12 in the next couple of hours, then the trend will shift to there. There'll be a hold level there and the candle will open on the other side of it, which gives it the ability to try and break up into this higher range. I'm not going to know that till it closes. As it currently stands, it's a really indecisive candle, so kind of like a doji with a bit of a body on it, but it's decent wicks to the upside and downside. It's not really, certainly not ready to break out from there. And that's sort of backed up by the 2-day close today. So, when you look at the 2-day, it's back inside its range, which is good. But this is just normal, like this is a normal trade. So when you hit a break level, you typically move back to a trend, which is that trend there. So it's at the break level, it's gone to the trend. So really there's no ability for that to break out majorly today. But it does have the ability to open another candle and bounce between break level and trend again. So this would have to go up to sort of 340, maybe about there, 344, etc., to be able to get onto the other side of that trend and go up. So as it currently stands, it just once again looks like it's not ready to have a proper break yet to the upside. What will happen though with the 2-day is that this trend that's running through here, which started all the way back there in June, it's going to move and it's going to go there. So instead of being under the trend, because of the size of this candle and the position of this candle, the trend support's actually going to shift to the bottom of it. So now we're starting to find that we're in a 2-day flag. So if we can hold the horizontal levels and then break through the topside trend, then it can start to move up, but it's not going to happen for a few days, that's for sure. Okay, so over the Bitcoin. Bitcoin's actually looking pretty good. We created this range trend down here, which is currently sitting at about 113. We haven't used it. It hasn't actually gone back to that. What it's done is just stayed above the more global trend, which runs, as you can see, very long time from all the way down there. So as far as closes go, if this was to just close up just a little bit more, it would create a hold level. So it would be quite bullish for BTC to close above 114.9. Just anywhere sort of in that area, 114.96A to 115. That would be quite bullish because number one, you want to be able to open on the other side of that trend, and then at least you've got a 50-50 chance of being able to push up. But number two, if you can actually get above, I think the exact level is more or less 115K and $3. If you can get above that and open on the other side of that trend, then you have a ladder point to bounce off, and you don't have a trend to restrict you. And that's when we suddenly look at testing some of these backside levels that are up here. And we've marked these out a while ago because 116.4 and 117, that's where a lot of that liquidity sits. And I think that's a good stepping stone to go up to retest those. They're broken levels. They haven't been retested. We've been bouncing off these inverses, sort of 115, and we've been bouncing off these other levels at like 114. But at some point, we really do need to go and retest those breaks. Now, when we do, that could be the end of it because you've tested a break level. You could then have another big dip. But as it stands, we should really be going back up there, and that might happen soon, particularly if we can close Bitcoin today and above that 115K mark. I would suggest this is one of those closes where you watch the last moments of the candle and you just see if they just sneak it up and push it up right there in the last could even be the last 5 minutes of the day, because the price is that close. Definitely worth keeping a bit of an eye on. Like yesterday, we were watching for this close. They pushed it down right near the end of the day, and then the next day it dipped, down to here. But it's come back up, so with help of that trend. So look at the 2-day. 2 days on the trend. It's above that inverse. It's got another one up here at 116, and then it's got the whole candle sitting there at 117. So 2 days kind of saying the same thing, except what 2 day is saying is that unless it closes up, unless it closes, same number, 115003, unless it closes over that, it's not actually breaking the trend. So it's just simply opening another candle on the other side of it. So the 1 day might break the trend, the 2 day might not. Either way, they'll have a little bit of freedom from this trend. They'll still be supported by the global trends, and seeing a bounce up to these sort of 116, 117 levels could definitely come about from that. And then once that liquidity is taken, you're still going to be under these trends from above. If that liquidity gets taken and those trends get hit, then you're just going to see a rejection. And without any kind of hold level in here, the rejection has to come back to the trend or down to these lower horizontal support levels down here. So still don't think we're really going to be taking off to the sky without some kind of flush. And they're not bouncing the way that they should when there's a flush. Like if you have a flush, you come back up out of it really fast because they don't want people to be able to get back in again. We're spending too much time in the lows. They're okay with your opening positions here because it's adding to the liquidity down in these lower areas that I think is where ultimately they are going to do that actual fast flush at some point. Could be wrong. not right about everything, but yeah, it's pretty hard to trust this. Seen it too many times before. Over to SOL. So SOL's still got support on the daily trend, so that's looking good. It's retested, rejected the inverse, come back to the trend. So that was the previous time it sort of got up there into the 168, 170 area. There's then a really big cluster of areas, sort of 173, 174, 175, all the way through. A really big cluster of resistance up there. And then some of the higher levels that we can run into. There's a weekly level with a lot of confluence around 181. So SOL also looks like it just wants to take a bit of a swipe to the upside and then come back down. What we're looking for, I've got way too many tabs open at the moment. My charts are getting really laggy. What we're looking for ideally is a close above. From a real global perspective, we sort of want to close above about 168.34. You can see this resistance that it's really struggling with here, which is a really important higher time frame level. So we want to close above that. If on a daily perspective we can get a close above 169.6, then we're creating hold levels. We have broken this interior trend, so I'll delete that off the chart. And this exterior trend, which is exterior to that interior, but realistically is interior to the bigger exterior. This one, as long as the candle closes up today, which means staying above 164, 163.8. As long as we stay above about 163.8 today, then the trend will shift out to there. So really we want to close up a bit more so that the next candle can open clear of that trend, go test this resistance. It'll probably still reject, but it's that could be that little bit of a last push. So where that was, it's got very laggy. Okay. Oh yeah, I've got 2 daily charts. Right, so the 2-day. 2-day would have to close above, where did that open? 169.5. So 2-day would have to close above 169.5 to be a trend break. It could do that in the next 2 hours. It's within the realms of possibility. Now, as you can see, you've got some of these older resistance levels coming through here. So really we want to close over 168.3 because then at least we're back up above this older 2-day break level. And as you can see, if we do that, then those 174.7 and 175 areas become more realistic. And there are higher targets. So if we can bounce off this break, then we could come back to this trend, which should probably be somewhere around 181, 182. That's got confluence with the weekly. We can go through that trend and hit these hold levels. They're sort of 186, 187. And at some point, from a really big global perspective, we're definitely looking at going back to these levels up here around 190s. But it's all just piece by piece by piece. So we've got to get and close over some of these lower levels first, and then we'll have a different range. So yeah, today we're really looking for closes that are above 168.3. Still got trend support, looking good. We could bounce back to that. You can take some pretty safe longs if we bounce back to these trends. And with it being a new candle that'll start tomorrow, if it bounces back to the 2-day trend, give it some time because it may dive down to a lower level. And that exterior 2-day that you see down here, that's down there in those 150s. So a rejection from this 2-day break level and then a 2-day dive all the way down here into the 150s to then pull back up through the trends, through the break, and then target these higher levels is possible. So when you look at where the liquidity has been sitting and where it's getting induced, people are opening these long positions. They're feeling pretty safe to have their stop losses down here under these candles because they're thinking, nah, we're good. It's reversed there. It's going to be a strong low. And really, it just comes down to efficiency of markets. If there is a whole heap that can be grabbed down here, that is where the market will go because we have structure to do it. And if people just stop opening those longs right now and everyone starts opening shorts because they're going, nah, we've never got past this 168 level in the last week or two, it's become resistance, it's not going up. If everybody opens their shorts, well, we've got the structure to go up as well. So, when you're opening your positions, particularly if you're on leverage, you just got to make sure that you stay well outside of the realms of where price is likely to go, as far as your liquidation levels at the moment, because they're definitely going to flush, and get rid of liquidity, maybe up, maybe down first. But you just got to stay outside of those areas where things could go, and have a backup plan. Knowing that there's different levels down here on other time frames where things will bounce. You make sure you've got the ability to bounce those levels and get out of your positions if suddenly there's some FUD or bad news and they dump it down to a lower level. And I just thought I'd show you this as well. So this is just a really one of the higher time frames that closed recently, which has got Confluence with that 153.2 area down there. The trend shifted, and we've got that trend is now sort of sitting up here around 180, sorry. Yeah, it's that one, 180. Now, if we reject that trend, we now have a hold level target, which is this 153 area. So they've developed the structure almost to wipe out both sides of the leverage table. And it's just a question of, does it go up, then down, then bounce back up, or do they go down? So I'm looking at this 12-hour close, and we've hit this hold level. We're staying above the 12-hour trend, and the next candle, if it can stay around these areas, and particularly if it can get over that 168.3 that we've mentioned, then we're going to be opening on the other side of the trend, and we could then take a bit of a bounce and we could head up here and try to hit these levels. So lower time frame stuff usually plays out a lot faster than higher time frame. You've got your 2 candle 12-hour range in here. This level here at 170 was the back side of the candle that's been hit. It created a rejection. It created a trend. We've held the support trend, and we've headed back here towards the 169 level, which is sort of the trade that I was waiting on yesterday, and we've taken that now back up to here. And now if we break that trend, open the next candle, the target then becomes something up around here, something between that sort of level. Now, what do we have in between those levels? So say 177 to 180. Well, in between those levels, we have that trend. And if that trend gets hit, the rejection of that trend could be all the way down here to a lower low, and it could take out all those stops that people think are safe sitting there under that 156 area. So just keep that in mind. Definitely a time to be taking profits as the price is traveling up, particularly into some of these rejection levels. Like if you'd taken profits off the backside of that candle there, you would have dropped from 170 all the way down to here. You wait for it to recover, you wait for it to create the trend, and then you re-enter what you're taking at 162 on the trend, and then you target it back to the hold here at 169. You take some profits off the table again. You can always leave like a very low leverage moon bag in the game, so that if it does just keep on going, then you get something out of it at least. But a lot of these areas are very clear. I should probably do a concept video on how trends and holds actually relate and how horizontal is the target of diagonal, etc. But it's kind of hard to do a quick concept video on it. It's the type of thing that takes a very long time to learn. But yeah, as you can see, it is moving the way it should be moving. There's no manipulation. there's just price. It's moving the way price should be moving. There are probabilities based on what comes next. A break of this trend gives a 50-50 chance of probability that there's going to be an upside move. And then if you take into account that this here is still going to be offering support, then it moves more towards we are going to see another upside than a downside. And I think you look at the liquidity, we've got the liquidity up in these areas in the 170s, and we've now formed these higher time frame rejection trends up there towards 180. Add to that the confluence that BTC's got rejections and retests required in the 116 and the 117 area. Yeah, I think you might still see a little bit more upside. And if it plays out in the next 2 days, just bear in mind you've got unemployment claims coming out on the 8th. And there's been a lot of hype recently about how the statistics and the numbers are all rigged, and there's all the politics involved, and there's tweets for Africa and all that kind of stuff. So if the numbers come out really different this time, after all of the politics, tweets, and hype, then that could be what creates, a big dump down. So we shall see how the day goes. Keep an eye on the close, and yeah, hopefully you got something out of this. Bit of a mix of where the levels are and a bit of education on how price moves. Cheers.